Okay, so for the past few years, China's been doing something, well, something pretty unprecedented in modern history. They're actually trying to relink gold directly to their currency. And let's be clear, what this really means is they're trying to rebuild how money itself works. I mean, this is a huge story. It's all about a brand new parallel financial system being built right now, designed to go head-to-head with the US dollar.
And to really get the scale of this, you gotta look at the numbers. Officially, right? The People's Bank of China says they're holding about 2,300 tons of gold. But the real number is probably way higher. I mean, you look at what places like Bloomberg and JP Morgan are estimating, and when you factor in the gold held by their state banks and sovereign funds, we're talking closer to 5,000 tons. That's a lot of gold.
So that brings us right to the big question, the one we're going to unpack here. Why? Why are they buying up gold at the fastest pace we've ever seen in modern history? I mean, they're not even hiding it. They're basically telegraphing this move to the entire world. There is a grand strategy at play, for sure, and it all kicked off with one single, massive event.
And that why really starts with a crisis of trust. You see, for decades, the US dollar was, well, it was king, the undisputed champion. It was the safest asset on the planet, the place every country went to store its wealth. But then, something happened. Something that sent absolute shockwaves through the entire global financial system.
Yeah, that turning point was 2022. Before that, holding US Treasury bonds, it was a total no-brainer, the safest thing you could do. But then the United States froze about $300 billion of Russia's foreign reserves, and that single act showed the world a whole new kind of political risk. For every other nation out there, the message was, well, it was loud and clear.
Suddenly, countries all over the world were thinking, wait a minute, if my reserves are in dollars, they're not really mine. They can be seized, they can be locked with just the click of a button. And that realization, it kicked off a global scramble for a truly neutral asset. Something that couldn't be frozen or seized. Something a country could actually physically own.
And you can see what happened next. It led to this really clear, accelerating trend. Central banks, especially in places outside the West, started dumping their US treasuries and buying up physical gold like never before. It was basically a vote of no confidence in paper assets and a full-on sprint to the safety of something real, something tangible.
But here's the thing. China's plan is way more sophisticated than just, hoarding a bunch of gold bars in a vault. They are building an entirely new financial infrastructure from scratch. The whole point is to make gold not just a shiny rock you store, but an active, functional part of the global economy again.
And to get just how revolutionary this is, you have to understand the old system. For decades, the global banking rules were basically designed to keep gold on the sidelines, to make sure it was something banks stored but never really used. It was intentionally crippled as a financial asset.
Yeah, under those old rules, gold was what's called a Tier 3 asset. Now, what does that mean? It means a bank could only count 50% of its value on their balance sheets. So if you had $1 billion of gold, it only counted as 500 million. That made it way less efficient to hold them cash or treasuries. Gold was basically stuck in a penalty box.
But then, everything changed. A new rule came into play, part of what's known as the Basel III Accords, and it took effect just recently. And this one rule, it changed everything for gold.
So, under these new Basel III rules, gold got a massive upgrade. It became a Tier 1 asset. All of a sudden, banks could recognize 100% of its value, just like cash. It's now on the same level as the best of the best. This was a huge step. But China knew it still wasn't quite enough.
Right, because even with this new top-tier status, you still have to solve the two biggest historical problems with gold, right? First, trust. How do you trust that your gold is actually there and safe? And second, volatility. The price of gold jumps around every single day. How do you build a stable system on that? Well, China thinks it has the answer.
They're tackling this with a two-part solution. First, to solve the trust problem, they're building what they call the gold corridor. Think of it as a decentralized network of vaults spread across different BRICS nations, all linked to the Shanghai Gold Exchange. So countries can physically hold their own gold. Then, to solve the volatility problem, they're doing something really clever. Instead of using the jumpy daily price, they're using a 200-day moving average. This smooths everything out and makes gold a much more stable asset for things like loans.
Okay, so let's recap. The foundation is now in place. Gold is a Tier 1 asset. They've solved for trust and volatility. So what's next?
Well, this brings us to the end game, gold's final upgrade. The one that could unlock its true power and challenge the entire dollar system at its core.
And that endgame has a name, HQLA. It stands for High Quality Liquid Asset. And you can just think of HQLAs as the absolute most elite, most trusted assets in the entire financial system. They're the bedrock, the plumbing that the whole global lending and repo market is built on, and right now, that's US Treasuries.
And this is where you see the huge difference between the old system and this new proposed system. The old way, if a country wants to borrow money to build, say, a new port, it needs to get US dollars and go through the IMF. But in this new system, based on gold as HQLA, that same country can just use its own gold reserves as collateral. They can completely bypass the dollar and the IMF. It's a total game changer.
So, let's make this real. Picture this. A country in Africa has natural gold reserves. They deposit that gold into a local vault in this new gold corridor. That gold gets registered on the Shanghai Gold Exchange. Then, the BRICS New Development Bank can issue a loan in yuan against that physical gold. And just like that, the country can use that loan to build its own ports, its own roads, its own power plants, all on its own terms.
And that is the ultimate transformation we're talking about. Gold stops being just a passive, shiny rock sitting in a vault. It becomes an active financial instrument, a real tool for global development, for lending, for building.
So you have to ask, what's the aftermath here? What happens if this whole plan actually works? Well, we could be looking at a world that's split into two completely different, competing monetary systems, each one with a totally different idea of what money even is. And it's not like the US is just sitting back and watching. It seems they're preparing for this shift too. They've been quietly repatriating their own physical gold, moving it out of vaults in London and bringing it back home. That kind of action suggests they know a world is coming where physically holding your gold is going to be everything. So you end up with this tale of two systems. On one side, you have China and the BRICS countries, building a system where money is backed by something physical, something ancient and tangible, like gold. It's a system based on control, on hard collateral. And on the other side, the US and the West might just counter by playing to their own strengths. Technology, a system backed by things like stablecoins, tokenized assets, maybe even Bitcoin. A system built on openness. And really, it all boils down to a new monetary divide. What is trust based on? In China's system, it's physicality and time. In the West's potential system, it's math and energy. One key trait is that it's controlled, and maybe a bit slow. The other is that it's borderless and incredibly fast. It's gold versus technology.
Okay, so on a practical level, what does this mean for investors? Well, some big banks are now suggesting that institutions should bump up their gold reserves by about 10%. Now, a 10% increase might not sound like a huge deal, but when you spread that across the entire global financial system, you're talking about trillions of dollars of new demand. Trillions! For an asset that, you can't just print more of.
And that leaves us with one final, pretty mind-blowing question. For the first time in modern history, what happens when money itself becomes a choice? When you can choose between these competing systems, competing philosophies of value, a world where money isn't a monopoly anymore. I mean, what happens then? Honestly, that's something we've just never seen before.